Hey everybody, welcome back. Mynor Ramos here, and Mike, Domico, and I are actually going through a series of videos where we talk about these 8 banking principles to help you understand as a life insurance agent, or maybe as a level 2 or level 3 finance type of client, that you want to get educated and you want to know how to move this needle forward, right, of economic mobility. But in the previous video, we talked about closed-end loans, and very related to that is this concept of interest accumulation. And here, I'll give you just an example. Most people who were to maybe take a $200,000 loan, right, at a rate of 6% right now, their monthly payment would be about $1,199 approximately, right? So if you were to look at how that 1,199 and you multiply it by 360 payments, the total payments is $431,677. So your $200,000 home is costing you $431,677, right? Now here's what's interesting. The interest accumulation, or the amount of interest that was paid, is higher than the amount that you borrowed. See, people are not educated enough to look at these instruments, to look at these notes, and to look at these things, because they're so conditioned to that monthly payment and that interest rate and that term, right? But Mike, you have a thought about interest accumulation.
Yeah, and you can be on either side of that, as you just pointed out in the mortgage. That's being on the wrong side of it. Um, One of the most brilliant minds in history was a gentleman by the name of Albert Einstein, and I'm sure most people have heard his name. And he was asked one time what he thought was one of the greatest wonders of the modern world, and he said compound interest. And they said, well, wait a minute, you discovered the atomic energy, you discovered E equals MC squared. Why is compound interest, so unbelievable? He says, because people don't understand the power. And again, it depends on what side of it you're on. If you have compound interest, in essence, working against you because you took out a mortgage, then exactly what you're saying. You could pay 3 times, 4 times as much as you borrowed over a term of a mortgage. However, if you turn that around and you're able to get the compound interest working in your favor, then you benefit from the compounding the same way the bank benefits from it every day.
Yeah, exactly. And that's what we want to empower our listeners to have this information. As you can tell, we don't have any illustrations here, because we want them to start to think. As we have these conversations, they're gonna visualize this. They're gonna start to really think through some of these concepts. So, if they want to be entertained, there's a lot of channels out there. This is about education. This is about
Well, I'm
impact.
glad. I was going to tell a joke, but I'll probably blow it. So,
All right. Well, we'll put the descriptions in the links in the description, and we'll keep going with the banking principles until next time. Thanks, guys.